Hello and assalamu alaikum everyone. Hope you are doing well. Okay, this is our first lecture of our audit and assurance subject. We have basically divided our syllabus into multiple sections according to the topics and the relevant ISAs. ISA is basically an international auditing standard. Okay. Now, when we talk about audit is a very professional activity that a person conducts on organization. Basically, audit refers to the examination of an entity. Now, audit has multiple different segments that we refer to, but in our syllabus, we are going to mainly focus on statutory audits, that is the audit by a government. So government basically assigns some companies the regulation that they have to get their financial statements audited. Now, what does audit basically mean? Audit basically means to get your financial statements checked, verified by an independent person who is named an auditor, who obtains the name of the auditor through multiple qualifications cleared. If a person has cleared multiple qualifications, which include chartered accountancy, that includes our ACCA qualification, that includes our CMA, ICW, CPA, there are multiple different qualifications according to the country and according to this state they are in. So if the person is qualified to perform or check your financial statements and you are getting your financial statements checked by him and your complete entity is under examination, that is basically known as an audit. Okay? So let's begin with the basic definition of what an audit is. An audit is an independent examination of financial statements of an entity, whether profit oriented or not, and regardless of size or legal structure. It is conducted to form an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. Now, what does this basically mean? Let's break it down. First, the sentence says an audit is an independent examination. What does independence mean? Independence basically refers to an uninfluenced person. Now, if I tell you that are you independent, what does it basically refer to? Independent basically refers to the condition where no one can influence your decision making regarding anything. Normally, when people are growing up, they're 18, they're known to be independent. Okay. Now, the independence here referring that you are at an age, at a status level, at a position where you can make your assumptions, make your judgments, make the decisions of your life. You are eligible in terms of age or financial status that you can do whatever you want to do. Okay. And no other party can now influence your course of life. So here in independence, when you're talking about an audit, independence means lack of influence. No one is there to influence you, whether inside the entity or outside the entity. You cannot be influenced by any other party regarding your decision making of the financial statements. Now, what is the basic overview of an audit? When you're talking about an audit, a person, a third party who has no relation to your organization, who has no link with the organization, is hired to do what? To basically check your financial statements. The keyword here is financial statements of the entity, whether profit or non-profit organization. Why have I segregated profit and non-profit? Because profit-oriented organizations basically focus on what? Profits. So there's a higher chance that their financial statements are going to be correct. Yes. But when you're talking about non-profit organizations, will their focus be on preparing their financial statements adequately? I guess not. Why? Because their main focus is not profits. Their main focus is basically to serve other people. So if a organization is focusing on serving other people, is it important for governments to check whether they have made their financial statements adequately or not? Yes, it is. The reason being, when an entity is very obvious that this entity or this person, if you're talking about a person or entity, if you are identifying that this person or entity is not going to be doing something wrong, we are basically showing a bias towards that company. We are basically showing a bias towards an entity or person. We are perceiving them as they're very innocent. But in the end, you have to keep an unbiased position, an independent position, an open position, and you have to check each and every one of you. Because mostly in the cases of money laundering and the cases of fraudulent activities, the people who are presented as the most innocent are the perpetrators. So if an organization is perceived to be very innocent, is working very unbiasedly, is working for a very noble purpose, there can be chances that some nobleness has some taints to it, some actions towards it. So you have to do what? You have to examine their financial statements as well so that you can see whether the company is truly a saint or it's just a disguise. Okay. Next, what they have to do, they have to obtain an opinion or form an opinion whether the financial statements are prepared in material respects in accordance with an applicable financial reporting framework. Applicable financial reporting framework first is basically what we have studied in ACCA till now is IFRS or GAAP. In most of the countries, IFRS is the followed financial reporting framework. Okay. So if you're talking about a financial reporting framework, is it followed or not is an important question that we have to see in the complete audit. And when we are moving forward, we are going to see the importance of IFRS. If you are studying audit and insurance, I urge you to have a very good grip on financial reporting because as we move forward, the financial reporting part will increase in audit as well. So if you are preparing for audit as well as your financial reporting exam, this is a good combination for you. If you have given your financial reporting exam and you're going for audit, this is an ideal situation for you because IFRS is going to be revised, used, and very optimistically saying that it will be very important for you. Okay. Now, if we are looking at whether our financial statements are made with IFRS or with our applicable financial reporting framework, we have to form an opinion that all financial statements, position or terms or numbers are presented truly. Everything is true and fair. There is no chance that was an error or there was a fraud in the entity. And for that, we have to establish an opinion. Opinion is a keyword that you should remember. I'm going to explain you in this section only why are we going to basically form opinion, why are we not giving them a guarantee here. This is a topic that we are going to discuss later on. For your knowledge, for the sake of discussion, I'm giving you an example. Okay. You have watched my demo lecture. Okay. You have watched this lecture on YouTube or anything else. So you form opinion upon me that yes, this person is correct for me. If I study from him, it would be a better option for me. I would be able to understand the particular subject better. Yes. But if you are looking at the demo, can you give a guarantee that you will pass this exam if you study from yes or no? It is a no. Why? A guarantee is 100% assurance, 100% guarantee, or 100%, let's say, a statement that's saying that I have no ambiguity here, I have no condition here that will lead to a failure in the exam. I am certain that this person is going to make my exam pass. Okay. In my defense, I would like to say that no person can give a guarantee regarding anything in their life, not even your personal life. You can't give a guarantee of anything in your life because there are uncertainties that you're going to face. There are things that are out of your control. There are things that have been existent and have a condition with you throughout the past. So, a guarantee is never a thing that can be given by anyone. An opinion, an assurance, a high level of credibility can be established, but not a guarantee. If you look at my lectures, you see that he's explaining things very well. He is giving all the examples relevant to my life. I can relate to them, etc. So here you can establish a reliability. You're saying that yes, I can understand what he's saying. It is a reasonable level of assurance. It is reasonably certain that I can pass this exam if I study from it. I can and I guarantee are two different statements that we have to follow in audit. I guarantee cannot be a statement that we give in audit as well as personal life. And here we can say it is a high chance I can. This is the statement the auditor is responsible to give, is expected to give if everything is true and fair. Okay. The main objective of an audit is to do what? Is to obtain or provide reasonable assurance. The thing I was just discussing with you was the reasonable assurance. That at a reasonable level, I am saying that yes, I am 80% sure, 90% sure that I can pass the exam if I study well. This is a reasonable level of assurance. An 80%, 90% guarantee. But a 100% guarantee is not allowed and cannot be given by anyone. We can say that the financial statements are free from material misstatement. I am reasonably certain. I am reasonably certain. I can reasonably say that work I have done. According to that, I can say the financial statements don't have any significant errors or problems. The financial statements present true and fair view to the financial statements of financial position and the performance of the entity. So it is giving a very clear picture of the financial position of the company and the performance of the entity. Now, if you look at what are we doing in an audit, okay, in an audit, we are basically doing what? We are basically referring to activities that we do. Okay. Activities that we do in an entity. Now, there are basically 4 activities that we do in an audit that include. I am summing up audit for you in just 4 steps. Okay. What do we do? By we mean the auditor. Number 1, what to observe. Number 3, what do we get? And number 4, what do we give? This is the complete explanation of audit for you. This is what we know, we need to know about audit. Number 1, what do we do? Now, if you want to give a guarantee or give a reasonable level of assurance that this person is doing something correct or this thing is at an adequate level that I can say this is a correct thing to be done. Okay. So you will be doing something. What will you be doing? You will be getting some guarantees about them. You will be asking around in the market that should I go for this teacher or should I go for that teacher? You are going to be assessing what should be done. Okay. So what things do we do? Basically, what is you are doing is known as an audit procedure. You conduct a procedure to do what? To obtain an evidence that from which you can give an opinion. So first step is performing something, doing something. If you want to get a reasonable assurance that I can teach you well, you will ask around in the market. You will watch my demo. The watching of demo, the asking around, what is it? It is an audit procedure. Now, what do we observe? First, we perform an audit procedure. What do we observe? The supporting documents. Okay, supporting documents or supporting evidences or supporting files, we can say. Now, supporting files basically add a higher level of reliability on your particular mindset. Let's say you have watched my demo lecture. Okay. Now you have watched my demo lecture, you have performed the procedure. Now you ask for one of the topics of the notes. So you see, I have well-established notes, I have practice questions, I have tests and mocks, etc., etc. All of them are present. So what are you doing here? You are observing my documentation. You are observing a supporting document for the original procedure you did. Originally, you asked around, people said, watch the demo lecture. So you are observing the demo lecture that is a support to your original procedure that you did. Next, what do we get here? Now you have watched my demo lecture, you have given a survey in the market, you have gotten some answers from it. So what do you get? You get an evidence based on which you can choose whether to go or not. So we get an evidence. on the basis of which we can make a decision. Okay, on the basis of which we give a decision is basically known as an evidence. Now, once you get an evidence that this is the correct teacher for me, what do we give? We basically give an opinion that yes, you give your opinion to yourself, yes, this is the correct thing to do, and you go to the teacher and say, I want to submit a form for the admissions. Submission of form, you're basically you're giving me an opinion that you have accepted me as your teacher, and you are giving me a form basically that is given by the auditor, that is known as an audit report. So you give an opinion slash report. Now talking about audit, how audit is processed here. If you're related to audit, first is basically you are told that something is going on in the entity. What do? We perform audit procedures to get a certainty that what is being done is known to us. Okay. Now something we performed a procedure. Now for a procedure to be performed, you need some hard copy evidences, hard copy documentation through which you can confirm the procedure is giving us the correct answer or the correct outcome. Okay. Then you observe supporting documents. Next, when the procedure has been performed, the document has been checked, you get an evidence through which you can form an opinion and give an audit report to the shareholders, telling them, yes, I have assessed the company, I have the supporting documents, I have obtained the evidences, and yes, my opinion is established in this way. This is the summing up of audit report, incomplete. Moving on. When an audit examines the accounts of an entity, what is he looking for? Now, this is a question everyone is asking for. The common misconception people have is basically that the auditor is there to identify frauds. You are wrong. This is not the purpose of an audit. Many people come here, they are saying that the auditor is there to investigate some kind of negative activities. No, it's not correct. That's a wrong opinion that you have established. You have the wrong supporting documents, you have performed the wrong procedures, you have not gone through the right documents through which you can know what an auditor is doing. The auditor is not hired to identify frauds. He is hired just to check the financial statements. Okay. So the main objective of an audit is to enable the auditor to convey an opinion as to whether or not the financial statements of an entity are prepared according to applicable financial reporting framework, that is IFRS. So main purpose is this. Okay, if you are saying that the auditor gives an opinion on fraud as well, yes, I know that he gives an opinion on fraud as well. He identifies fraud, but is not his duty. It is not his duty. If you are committing a fraud, let's say you have received 100,000 for your sales of something. You recorded it at 80,000. Yes, you received a money of 100,000 for some amount for some transaction that you have done, and you recorded it at 80,000. Were you supposed to record it at 100,000 according to IFRS? Yes, you were. But did you record it? No, you didn't. What is the act that you're doing? You're committing fraud. But in terms of financial statements, are you following the IFRS? No, you are not following the IFRS. The IFRS is not being followed here. Due to which the auditor has identified your fraud and is giving an opinion on the basis of that as well. So anything that is hindering or that is intercepting in the way of getting a true and fair or financial reports or the financial statement, you are going to check that. Anything pertains to anything that is there. If anything is related to financial statements, whether be it a comment or a legal case that has no link with the company right now, that is going to affect the company. If anything is related to that, even then the company, the auditor will be liable to check the financial statements. Now he is having a duty, he is having a responsibility to check the financial statements and anything related to them that will affect the financial statements. So keep this misconception out of your mind that he is there for fraud identification. Fraud identification is a different type of audit that we're going to discuss as well. Okay, here we are just going to check the financial statements whether they are true and fair or not. Okay. Now, audit in layman terms. What audit is basically an annual medical checkup. A person goes to a doctor for a health checkup. The doctor conducts tests and reviews symptoms before giving health report. Similarly, a business gets into financial record checked by auditor. The auditor reviews the financial data transaction system to assess whether the financial statements are reliable and accurate. Auditor is equals to doctor, company is equals to patient, and financial statement is equals to medical report. Now, should we apply the four steps here? Yes, we should. Okay. The doctor conducts test and reviews. Test and reviews is basically test is equals to procedures. He observes test being conducted. Okay. Next, he obtains evidence, the report of the test. Yes. And what are you doing? What are you doing? You are giving them an opinion that you should get these things checked, or you should take these medicine and you will be able to get well. So you're giving an opinion to get fit. Okay. Now tell me one thing. Following this scenario, do you go to a doctor and you ask them that I am unwell, please give me medicine? Can the doctor give you an assurity that you will be absolutely fit and fine after you complete the medication he have given you? No, you cannot. You cannot give an assurity that this will happen. So if this is not going to be assurity by the doctor, who is a very experienced person, very knowledgeable person, how can an auditor give this assurance to you? So while audit does not guarantee the financial statements are perfect, accurate, it offers reasonable assurance that there are no material misstatements either due to error or fraud. Now you have been reading the word material again. But one word that is going to be there is misstatement. Misstatement is basically misrepresentations, mistakes, mistakes made intentionally or unintentionally, both can be here. So we cannot concise it to one category or one area. And material basically means, I'm giving you the overview of materiality. Materiality is a topic that we're going to study later on, not right now, but I'm just giving you the word for the reference so that later on, when you read the word materiality, you are not confused what is he talking about. So materiality basically focuses on the area and amount, a threshold after which the economic decision making of a shareholder can be affected. What does it mean? It means that after a certain line, after a certain barrier, if you cross that barrier, it is going to impact you negatively, or the amount or error on this stage is going to impact you immensely. So anything that is impacting the shareholder or a person who is willing to invest or divest in the company, whatever, is being affected. If a percentage where a person is investing or divesting is affected after that line, you are going to call it material. So let's say this is the line. An amount is known as material if it crosses this line. We'll keep it till here. So that you know that materiality is basically crossing of a line that we should not cross. Now, crossing this line will affect the third party who is willing to be interested with our company. Okay, that is known as material. Now, why is there a need of an audit? The need of an audit is for credibility and trust. An audit enhances the credibility of financial statements. The stakeholders, such as investors, lender, or regulatory audit accounts, to make informed decision making. This helps us in doing what? This helps us in getting assurance that our financial statements are true and fair. Financial statements are true and fair basically tells us that this company is reliable. We can invest in it. There are no ambiguities here. So if we take an example, I am a third party to you, okay? Or leave me. If you have attempted a test and a third person comes in who is knowledgeable, experienced, and have relevant exposure, checks your test, will you be satisfied that these tests that were made and attempted by me are true and fair? So if another person comes to you and asks you for the answer, he says, "What were your marks?" He said, "I have checked my tests through an independent person. He gave me a review. This is the review." He sees your answers and he says, "Yes, you're correct. You are a knowledgeable person. Your test was checked by a third party. He's confirming it that you're correct. And so I can rely on your answers. I can trust you with my answers." So a trust is developed when financial statements are checked by third parties. Then legal and integrity compliance. Many jurisdictions require business to have their financial statements audited annually, especially public limited companies, companies above a certain criteria, entities receiving public or donor funds. Basically, any company that is having an impact on the normal public or people around them is subject to an audit. Whether be it a statutory company, whether be it a private company that is crossing a threshold, whether it is a public listed company, whatever it is. So it has a requirement to get audited. In Pakistan, under 2007, Companies Act 2017, every company except small companies and private companies are within a limit of turnover or capital must be audited by a chartered accountant. Now, detection and prevention of fraud. Although, now read this line very carefully because I've discussed this and I'm going to highlight it. Although not primary objective, the auditor may detect instances of fraud. Although not his primary objective is to check the financial statements, may detect instances of fraud, misappropriation of assets, or manipulation of accounts. No instances of fraud, misappropriation of funds, or mismanipulation of accounts. All three affect the financial statements. So that is why when anything is affecting the financial statements, we say this is the duty of the auditor as well. This is the secondary obligation of the auditor. The presence of audit also acts as a deterrent against fraudulent behavior. Now, how is it possible? Now, if I tell you that there is going to be a inspection or you are going to an exam hall, let's say, let's take an easy exam. You're going to the exam hall. Do the guards check you if you're taking any paper, pen, extra things within the organization, within the building or premises of the exam? Yes. So many times they catch you, they're for the catching purpose, but many times people are afraid that they will be caught and they will try to avoid this situation. Okay. Then we have an improved decision making. How is it improving decision making? The management also sees that the financial statements, after being checked by an auditor, they are reliable, that the financial statements are true and fair. They are very satisfied with their performance is good. So a third party comes in and gives you a guarantee, a certificate that your financial statements are correct. Then you are very happy, you are very certain that you are doing a good job. Okay. Now the figures when are accurate, you can base your future planning, your future decision making based on this. Let's say I can say that this year I made a revenue of 100,000 and this is the correct amount. If this is the correct amount, will I be able to trust this amount and make a prediction that next year I will have a 20% increase? And I can say that this will be multiplied into 20% or multiple of the today's revenue. So next year I will be earning 1,20,000. This is a future projection that I can make if I have trust on the financial statements. Next, investor and lender confidence. Now there are third parties who are associated with you. Third parties basically refer to people who are not within your entity, they are outside your entity, and they are not familiar with the processes. If you don't know me, you don't know my daily routine, you don't know anything, and you come and check my financial statements. If a third party comes in, he checks my complete routine, he checks my data, he checks my notes, he says, yes, everything is all on point, everything is correct, you are right on the money. That means he is giving you the confidence that my notes are correct. So if some third party assures me, gives me a guarantee that yes, your notes is correct. So the third party who is willing to study from me are going to get an independent assurance. They're going to get interest or confidence in me as well. So investor and financial institutions are more likely to provide capital for loans if the company's financial statements are independently audited. Audited accounts signal financial transparency and liability, saying that yes, we are true and fair. So lend us money, give us money, and we are going to basically return the money back to you. We are in the position that we are going to be able to pay you back. Okay. For our first lecture, I'll try to keep each of my lectures within 30 minutes duration. Our lectures are promptly designed to be taught at a minimum level, so it is easier for you to revise, study, and meet your schedules. If you are working, that's a thing that we have considered. If you are working, you're traveling, you have 30 minutes or 20 minutes, so you can take a lecture in the duration and complete a topic in a concise, precise time. So we will be focusing on this method only. I'll try to give you as long as detailed information as possible for the exam. Wherever I see fit, I'm going to give you numericals. I'm going to give you tests as well. So we are going to have section-wise tests. We're going to have section-wise reviews as well. We are going to have live classes. We are going to have a very extensive preparation. The only objective here is to pass this exam, not only pass this exam, but to retain information for your lifetime. I'm going to try to give you examples that are for your practical lives, that are going to be fitting your personal lives as well. So wherever you see that the audit is being applied. In your practical lives, you are not aware of the technologies, but you are auditing everything. Even if you are buying groceries, you check the expiry dates. What is it? You're performing an audit procedure. You're watching the expiry dates to get an evidence that yes, this thing is good for me. You establish opinion that this supermarket keeps everything that is fresh, not expired. You, whenever going to a job, you inspect the company, you perform audit procedures there to get assurance and opinion established for yourself that whether you will be able to adjust there or not. So audit is everywhere within your personal life as well. But the only thing that we don't have is a perspective towards it. So I'm going to establish a perspective for you for your practical lives where you are not going to forget audit for your entire life. So that's all from my side for the first lecture. We'll meet in the next class. Till then, enjoy learning. Allah Hafiz.